Hi there, and welcome to our stock analysis on Tesla. They recently reported their second quarter earnings, and what we're gonna do here is walk you through our three-step process so that you can better understand the company and anticipate the next move, whether it is to the upside or to the downside. Now, in terms of our three-step process, we're going to first apply due diligence to better understand the situation of the company and also how they performed during the quarter. In step number 2, we're going to apply some of our technical skills where we are applying PE multiple and sales multiple to help us better understand what is a relative or a reasonable price target for the company, which will help us in step number 3 come up with our investment thesis and again apply our price target. So what you're getting to see at the end of the day is the process from an analyst standpoint so that you can have an objective game plan and action from an execution standpoint when it comes to the decision-making process of buying and selling a stock. Now, before we dive into the content, I just want to point out several stock analysis lectures like this one that we have recorded, like Netflix, Amazon, Teladoc, and Zoom, where we came up with our own price target, and long and behold, the stocks actually reach our price target. So we're 5 for 5 with each and every one of these stock analysis that we've uploaded in our YouTube channel. But what's important is the methodology, is the process, is understanding the skills behind the decisions of buying or selling a stock, which is a lot more than just hitting the buy button. So at the end of the day, folks, what we're trying to do here is share our knowledge to elevate your understanding of stock analysis and make you a better investor. Now, if this is the first time that you're watching one of our lectures in our YouTube channel, please don't forget to hit the subscribe button and turn on the notification so that you're one of the first to receive an email when we upload lectures like this. So with that being said, folks, let's dive right into the material. In step number 1, we are better trying to understand the situation of the company. So as I mentioned earlier, they recently reported their second quarter earnings. So where do you find the information to understand or assess how they perform in the last 3 months? So you see right here on their website, if you scroll all the way to the bottom, it says Tesla 2020. So if you click on this, it'll take you directly to about the company section. And you can see that on the left-hand side, they have several menus right here, several selections. We want to click on investors. So if I click on investors, you're going to see information about the company, their stock. If I scroll down, they have a section called events and presentations. And you see right here, July 22nd, 2020, Tesla Inc. second quarter 2020 report. If I click on the update, the one that has the icon, the Adobe icon, the PDF files, if I click on that, you can download basically their report of how they perform in the quarter. And they tell you everything that they are releasing to the public so that we as investors or analysts can make a better sense and understanding of the company. Now, I'm not gonna go directly or spend too much time into this because I've already gone through it. I just wanted to show you the process where you get the information so that you can understand it or read this yourself and come up with your own opinion. But let me pull up here the presentation that we put together beforehand to make better sense of the quarter. So in terms of the second quarters, on the top line, which is revenue, they actually beat expectations. They came in better than expected for the quarter. You can see right here what the street was expecting versus what they actually reported. So the street was expecting 5.3 billion. They actually came in at 6 billion for the second quarter despite COVID-19, and they also had to close some of their operations temporarily because of the stay-at-home orders and the national emergency that we had due to COVID-19. Now, if you look at the bottom line, earnings per share, they also beat expectations. The street on a GAAP basis was expecting minus 86 cents. They actually came in at 50 cents. And also on a normalized basis, they were expecting 3 cents a share. They actually came in at $2.18. So strong quarter despite the challenging environment with COVID-19. Now, if I move to our next slide right here and we try to better dissect, or if we go a little bit more in depth in understanding the quarter, you can see on some of our bullet points here that, again, they reported strong top line growth, But here's something that is very important. And this has also been some of the negative clouds surrounding Tesla, which is about profitability, free cash flow, their ability to turn a profit. When compared to historical performance, they were actually losing money. They were burning through a lot of cash. So in terms of their gross profit for the quarter, they reported $1.2 billion. That's an increase of about 6.9% year over year. They also had regulatory credits for the quarter, which was approximately $428 million. Now, this is one of the reasons why they had better than expected earnings on the bottom line and also their profitability, the margins. It was due to these credits. And I'll talk a little bit more about what these credits means and what they represent as we move further along with this lecture. In terms of operating income, they reported $324 million, represented 5.4% in terms of margins, but operating margins from a percentage standpoint, the growth was 8%. So again, you're seeing Tesla now start to report more or less profitable quarters, and the expectation is that they're going to continue to report profitable quarters. So they are now sustainable from a profitability standpoint and their ability to generate cash flow, which a year ago or several years back, this was the concern behind investors' investment decision, which was, are they going to be able to turn a profit given how much cash they were actually burning? In terms of the quarter, they ended their balance sheet with $8.6 billion in cash. Shanghai factory, they gave us an update. Construction for Model Y lines in the Shanghai factory's process progressing as planned, with first delivery expected in 2021. Okay, so next year they're expecting to deliver vehicles from that Shanghai factory. In terms of cash flow, net cash provided by operating activities was $864 million for the second quarter compared to 864. So again, you're starting to see an increase in positive operating cash flow. Now, one of the numbers that I pay very close attention to is free cash flow. For those of you that don't understand, or this is the first time you're hearing what free cash flow is, you're taking the company's operating cash flow from your cash flow statement and you're subtracting your CapEx, the investors that they are making, the capital investment in creating their manufacturing gigawatt factory. You take operating cash flow less your CapEx, gives you free cash flow. Free cash is a very important metric or a very important number because it's the money that you can use to reinvest in the business without raising capital from investors or from debt holders, okay? And let's see here, reported free cash flow was $418 billion for the quarter, so that's pretty positive. In terms of outlook, so the company expects to deliver over 500 vehicles in 2020, so over 500,000. The company expects to have sufficient liquidity to fund their product roadmap, long-term capacity expansion. Okay, good. So they're well capitalized to continue to grow the business. Expect operating margins to continue to grow over time, ultimately reaching industry-leading levels. Okay, so this is good. Essentially, as they continue to scale and as the economy reopens and hopefully we get through the coronavirus situation, they're going to be able to produce more vehicles at a more profitable level. And as they become perhaps, as they reach a level of max profitability, you're going to see their operating margin and their free cash flow expand, which means that for every dollar of revenue that they generate, they're going to get to keep more. And the more money they keep, what do you think they're going to do? They're either going to reinvest into growing the business, and hopefully in the long run, they can perhaps issue a dividend or buy back their own share, which is all positive to the long-term outlook of the stock. So very important metrics to keep in mind and pay attention to: free cash flow, operating cash flow, CapEx, and also how they're expanding their margins. In terms of products, Tesla continued to build capacity for Model Y at Gigawatt Factory Berlin, Gigafactory Shanghai. Tesla remains on track to start deliveries on these vehicles, well, like I mentioned before, 2021. And this is interesting too. One of their new products, the Semi, the big truck, deliveries will also begin in 2021. So they're starting to roll out their delivery dates on new products, the semi truck and also the opening of their Gigafactory. Here's also a good piece of information that they released during the second quarter is that their next plant in the US is going to be constructed in Austin, Texas. So again, that's going to be their second plant operating here in the US. And you're seeing that on a global basis in Berlin, Germany, and in Shanghai, China, they are putting the right pieces in place, the infrastructure to still become or continue to be the dominant player in the electric vehicle market. So very important piece of information that they reported. And again, a strong quarter despite COVID-19 downward pressure in the overall economy. So kudos to Elon Musk on performing a really strong quarter. Now in the second slide, as I'm showing right here, this is the different takes from other analysts on Wall Street that do cover the stock. Now, this is from Deutsche Bank. They have a hold rating on the stock and also a $1,500 price target. You can see it right here. And what stood out from this analyst in their research report is these points right here. So, investors' focus will likely now turn to Tesla S&P 500 inclusion, which should cause large index fund buying activity. So that could be a catalyst that is on also the back of investors' mind, that if they get added into the S&P 500, that's going to force other fund managers that mimic the S&P 500 to buy the stock, adding it into their portfolio, which is going to increase or create some sort of demand for the stock, therefore increasing shares. What else here was also important? Their battery day is something important to pay attention to, which is going to be September 2022. So for those of you that are investors in Tesla, pay close attention to this date to see any news information on releasing their full autonomous vehicle capabilities on all of their cars or any other type of product updates. In terms of long term, this analyst mentioned that we believe Tesla is positioning itself for much higher volumes, officially confirming Texas as the site of its new U.S. plant will produce Cybertruck, Semi, and Model 3 Plus Y for Eastern U.S., and rapidly making progress on Berlin Gigafactory and Model Y in China, as both stated for start of the production next year. Okay. In terms of valuation, right? So how is Deutsche Bank valuing the stock and how do they come up with their $1,500 price target? So here it is, and I separated this. They're using a blended valuation format. So our price target is predicated upon 50-50 blend of a DCF analysis, short for discounted cash flow, and 2021 estimate base multiples analysis is self-blend of PE, EV over EBITDA, and price to sales multiple. For our own valuation, we are applying, which is going to take us to step number 2, sales multiple and PE multiples to come up with our own price target. And we're going to walk you through that so that you can better understand that process. So this is pretty much from Deutsche Bank. I think it was a strong quarter. And again, they raised their price target to 1,500. Now let's look at a different perspective. This is from JP Morgan. This particular analyst out of JP Morgan actually has a much lower price target than where the stock is currently trading at right now. Their price target is $325. That is a significant downside from where the stock is currently trading at. Now let's see what stood out or what's important, at least from my perspective, on the first page of the research report. Here is this bullet point. So operating income beat versus consensus was driven by much higher than expected regulatory credit sales. Now, what does credit sales mean? Which tends to be lumpy and are expected to decline over time. To accelerate the transition toward more environmentally friendly transportation, governments around the world have created various emissions credit trading schemes whereby automakers producing predominantly internal combustion powered vehicles are incentivized to make payments to Tesla in order to avoid what would be even larger fines. So in simpler terms, traditional automobile manufacturers based on gas, right, combustion engine, they have to pay Tesla I guess it will have to be some sort of a credit sale based on this research report per every vehicle that they're producing. This is to make things more environmentally friendly and to reduce their emissions. So this is quite interesting. So this is probably why Tesla reported such strong numbers on the top line and why their margin expansion increased during the quarter, because of these credit sales. Traditional automakers producing combustion engine cars paying Tesla to avoid bigger fines. And this is where you're starting to see the shift from a lot of the traditional automobile manufacturers into the electric vehicle market, because it's, number one, it's more efficient, and the younger audience, the younger demographics, the millennials and Gen Zs, were more focused on purchasing, were more likely to purchase an electric vehicle, predominantly coming from Tesla. They are the main market player, which is a strong catalyst for the stock. Now, how do they come up with their price target of 325, right? Are they saying that, look, even with these regulatory credit sales that traditional auto manufacturers are paying Tesla, is that enough? Is that significant to warrant a $325 price target, given all the momentum this Tesla has from profitability, the growth in the electric vehicle market, the high demand from millennials, and simply having the best product out there? You know, I've seen videos of people test driving a Tesla for the first time, and they're saying, look, it's like nothing else they've ever driven. You know, it's like when you compare it to a phone. It's like using an iPhone compared to a flip phone that came out in the early 2000s. There's really no comparison in terms of what you're going to pick. So that is a comparison in the customer experience, what you're hearing from them after they test a Tesla vehicle. So it's a great product out there that they've basically produced. Now let's take a closer look at how they're evaluating the stock. So as I mentioned, JP Morgan, they're using a blended approach of multiples and their DCF analysis. Right here, you can see their DCF analysis has a $295 price target, and their 2021 multiple-based approach has a $356 price target. You take the average of both of 50 on each price target, and they arrive to a $225 price target. Now, is it correct? Are they right? Time will tell. If we look at Deutsche Bank, they're a little bit more bullish. They have a $1,500 price target, and they're telling us the PE multiple that they're using. They're using a 40 times PE multiple on 2025 EPS numbers. So they're going out 5 years, discounting their expected EPS 5 years out into the present time, and they're applying a 40 times multiple on a PE basis. They're also looking at EV over sales. They're using a 7 times multiple, and which they're saying, look, trades more in line with other companies like Nikola. I'm not sure what these other two companies are, but they're saying they're trading more in line with these other companies. I disagree. I would object that Tesla does deserve a premium, and it should not trade in line with other alternative electric vehicle companies, because Tesla they've already proven themselves. They have several years head starts on these other competitors, and now they're turning a profit. So I don't think they should be trading at 7 times. I think they should be trading more in line with their growth, which would be about 10 times EV over EBITDA. And you're gonna get to see that once we open up our model, and you get to see the thought process of how I came up with a 10 times multiple. All right, so I just wanted to share how the analysts at JP and at Deutsche Bank value the company and what was their price target. Now this next slide gives us a more holistic view on how other analysts on Wall Street are pricing the stock. What was their price target after they reported their second quarter earnings? And you can see here that there's different perspective. I mean, I've highlighted in gray some analysts that have price targets, below the current share price. Look at these guys, $560 price target. These guys, $393. Let's go down, $850 price target. Some of them actually raised their price target, right? You have some analysts right here that increased their price target to $2,200, $1,800. Okay, here's another analyst, $2,400. We have another analyst with $2,600. If we take the average of all of these current price recommendation, we get $1,413 price target, which represents a 74% increase from the price target that analysts had before they reported earnings. So I guess this is a positive for the stock. However, this is still below the current share price. But we have to do our own analysis to determine what is the price target. We have to apply our own multiple based on our own methodology and then our understanding of the stock and what we should pay for their growth, okay? Now, this slide shows our own analysis. So we're taking several components here. And this is step number 2 of our 3-step process, applying our technical skills to come up with a price target. The technical skills here is simply multiple valuation from a sales standpoint and a PE standpoint. So the first thing I want you to take a look at is our sales numbers right here. This sales is what the rest of Wall Street is anticipated on a consensus basis. Look at the growth for this year, 2020. The street is expecting a 20% growth in revenue, even despite COVID-19 and all of the challenges that it presented itself. But next year, look at the growth. It's expected to be 37%. So it's an uptick. And then the following year, in 2022, they're expecting revenue to grow at 28%. So this is strong top-line growth number on a mature industry, auto manufacturers. However, the electric vehicle market is growing much faster. Consumers are starting to adapt electric vehicles. And this has happened first with the loyal fan base that Elon Musk has created, but now it's starting to hit mainstream, right? More people are starting to recognize this. So very strong growth for Tesla. And when you also look at the market share for Tesla, pay close attention down here. Electric car sales in 2019. Sales of electric cars topped 2.1 million globally in 2019, according to IEA data. Electric cars accounted for approximately 2.6% of global car sales and approximately 1% of global car stock on the road in 2019, which resulted in a 40% year-over-year increase. Now, Tesla has approximately 22% of the electric vehicle market. So you have a sector of the automobile market that grew 40% in 2019, last year. Of course, this is before the coronavirus. But we are still expecting this section or segment of the automobile vehicle market to continue to increase at a double-digit growth rate, and Tesla has 22% market size. I believe that Tesla will continue to increase their market size once they launch or their operations, their gigafactory in Shanghai, Germany, and in Texas. Once those 3 factories are up and running and they begin to deliver vehicles, I expect them to increase that market share. Not 22%, it'll probably be more like 30% over the next 3 or 4 years. So there is tremendous upside potential for Tesla. So this is how you make the connection with sales growth, okay? Make sure you understand the market, their market share, how many vehicle units are being manufactured and produced each year, and then look at what percentage of that accounts for Tesla vehicle delivery and how they're going to continue to scale, where in the near future, maybe 24 months from now, they're delivering over 1 million units a year. So very bullish and positive numbers. In terms of EPS numbers, you see right here in my income statement what the street is expecting on a normalized basis. 2022, $7.97. 2021, $14.95, and that's an 88% growth rate. And in 2022, they're expecting $21.98. That's a 47% increase. So again, strong financial growth on an income statement perspective for Tesla. And of course, we apply our valuation multiple on a sales basis, EV over sales. Okay, so here for 2021, okay, if we apply a 10 times multiple to their current revenue, you would arrive to an implied enterprise value of $295 billion. You extrapolate cash and you add your total debt, and that gives you net debt. And we obviously want to subtract our net debt from our enterprise value, and we end up with an equity value. You divide that by your shares outstanding and you get an implied share price. or an implied price target on Tesla. But I'm focusing more on 2021 financials. Why? Because 2021, we are anticipating, or we hope, that there is a vaccine. On a regulatory side, governments would have more process in place to hopefully manage or handle any further pandemic outbreaks. And businesses will have the proper safety measures and protocols in place, again, to prevent any other type of virus. So I'm hoping that 2021 will assume to some sense of normality, and Tesla can continue to operate on a normal business environment. So that's why I'm focusing more on 2021. So look at my multiple for 2021. I'm assuming 11 times. If you multiply 11 times from an EV over sales standpoint by 40.4 billion, which is the sales projection, you get 449 billion in enterprise value. You subtract your net debt, you end up with an equity value of 442 billion. You divide it by the shares outstanding, and you end up with a $2,300, $2,387 to be exact, price target. So this is one methodology, and we got to see the other analysts at JP and at Deutsche Bank. They were using a blended methodology with PE and sales, but JP Morgan was using also DCF analysis. We decided not to do a DCF for simplicity purposes. Now, from a PE multiple standpoint, for 2022, if we applied 140 times PE, now why am I getting, or where am I getting 140 times PE? I'm assuming that for the growth that they're experiencing, that they're expected to experience in 2021, I'm assuming that the market is going to pay a premium for that growth. How much of a premium? Here, 1.6 times. So if we're paying 1.6 times for that growth, how do we come up with an implied PE multiple? Simple. Multiply that 1.6 times 88% and then multiply by 100 to get a whole number, and that's how we come up with 140 PE multiple. I think that is reasonable. Like I've mentioned earlier, I think Tesla deserves a premium when you're comparing it with other electric vehicle competitors because they have a head start. And in addition to that, they're profitable, so they've proven themselves. And that gives me a price target of $2,094. So this is more of the thought process behind my valuation skills in coming up with a price target. And we're going to change this. We're going to actually open up our financial model so that you can see the math behind it. So let's pull up here our spreadsheet. Here it is. Okay. And you can see right here, number one, on the left-hand side is my income statement, what the company was projecting. Number two, on the left-hand side right here, I have comparable company analysis. Okay, and you can see Tesla, how they're comparing with everyone else. So here's Tesla. All right, look at the industry mean and median from different multiple standpoint. Okay, let me draw this a little bit better. There we go. Okay, and you can see the different competitors, right? On a multiple basis, some people might argue that, hey, look, Tesla is at 10 times, it's too expensive. But I will argue that, listen, they have about 22% market share in the electric vehicle market. They're opening up more factory. They're going to continue to dominate as governments and consumers begin to shift and focus more on alternative sources of energy that are more environmentally friendly. I think that is the shift in the momentum or the emerging trend from a conscience standpoint. When you're making a purchase, if you're a consumer, you want to make sure that you're contributing to the environment and that hopefully we can leave this planet to our kids and grandkids and we don't destroy the environment. So perhaps it might be a premium to pay, but a lot of people feel that way, and this is where the Elon Musk and Tesla loyal fan base are coming from. So you have to understand that perspective when you're looking at why the company is trading at such high multiple, which these other companies are not. And again, they're behind when it comes to adapting electric vehicles, all right? So on an EBITDA basis, they're trading at 78 times, I mean, a huge premium. On a PE basis, you can see here, not meaningful because obviously they were losing money before, but we can look at a forward basis. And you can see here other companies. I mean, this one, BY Company Limited, this is trading at the Hong Kong Exchange. These guys are 184 times PE multiple. Okay. So enough with this. Let's go back over here and show you the math behind my price target. So I'm taking 11 times. Why 11 times? I'm assuming that the market is going to pay approximately 0.3 on that growth rate in sales from 2020 to 2021. 0.3 times 37% expected sales growth times 100 gives me 11 times. Again, I think this is reasonable. You can play around with this math to see what type of implied enterprise value you get. You multiply the 11 times by your expected 2021 sales, and that gives you enterprise value. You calculate your net debt, you subtract that from your enterprise value, you get equity value. You divide your equity value by your shares outstanding, and you get an implied price target. That's how I got my 2387. And then I applied the same methodology on a PE basis to earnings per share. Right here, you could see 1.6 times. Multiply that by my growth rate times 100 to convert it into a whole number, and I get an implied PE of 140 times. Then you multiply the PE multiple 140 times your EPS for 2021, and we get an implied share price or a price target of $2,000.94. Now, because valuation is more art than science, I also applied a blended metric or a blended methodology by taking my sales multiple and my PE multiple and then the price targets of those two methodologies, the results, and I took the median of both of them. And I come up with my own price target of $2,241, which represents a forward multiple of 149.9. I mean, we could basically round this to 150 to be exact. So a forward multiple of 150 implies a potential upside from Friday's close of 58%, right? From where it's at right now. But this is applying a very technical, skill-based methodology of comparable company analysis and applying those traded multiples to come up with a price target. This is just one methodology or one form of valuing a business. Now, if I continue to scroll down here, you can see the earnings estimates on Tesla from other analysts or in Wall Street consensus. But here's what's important to pay close attention. Look at their gross profit margin, their gross margin, okay? See here, 2020, 19.98%. Look at 2021, it's higher, okay? Look at 2022, it's higher. And look at 2023, it's slightly higher by a few basis points, okay? But you can see that going out into the future, other analysts are expecting Tesla to be more profitable, which means their EBITDA will increase, their operating margin increase, they're gonna have more free cash flow, and at the rate that they at this rate, if they continue to increase their free cash flow, how are other electric vehicle manufacturers that are entering the market, that are losing money, going to be able to compete with Tesla when they're going to be much further ahead? And guess what? With the free cash flow, they can invest or create new products to compete with their competitors and just knock them out of the market. So this is why the market is paying a premium for Tesla for these reasons that I'm mentioning. And of course, there might be a lot of other reasons that I'm not mentioning and that I also might miss in my own analysis. Remember, we all have our own blind spots. We all have gaps in our analysis, but we have to make the best decision that we can from our information. And when we're making the decision of buying the stock, we have to apply risk management. That's more from the trader and portfolio management perspective. Now, look at what Thomson was showing when you look at all of the analysts that cover Tesla, or actually the 30 analysts that provided their price target to Thomson, which is a database. And when they take the mean and median, the average and the median of all of the price targets, this is what the street is suggesting. Right? They have an average price target of 1,184, and on the median side, they have an average price of 1,150. So 1,100, we can just round down for simplicity purposes, okay? And like I showed you in one of our slides, right after they reported earnings, we have a wave of analysts updating their price target, and they actually increase it by about 74%. Right? So the average price target before earnings was 934. Now the average price target is 1,413. Okay, so this is other analysts that provide their recommendations and their price target to Thomson. And when we take collectively the average of all of them, 14.13. Okay, so they've raised their price target. So it's like they're catching up to the stock. So this is our analyst perspective from a technical side, applying our technical skill. But there's a lot more to this process. So now this is going to take us to apply technical analysis. This is more applied by traders that trade the stock just on a purely technical basis. So here, let's go back to our slide. And here is the chart of Tesla. But I'm going to change this screen, and I'm actually going to pull up the chart, and we're going to perform technical analysis, as you're seeing right here. So there's different principles and topics that you need to familiarize yourself when you're looking at charts. That is determining support and resistance. Are we in an uptrend or in a downtrend? Can we apply Fibonacci retracements to identify support points? Here's a very basic understanding of charts and how stocks unfold and how they behave, their natural course of action in a trend. And that is quite simply, they go up, they come down, profit taking, shaking off the weak hands, and then the longer term bulls, the fundamentalists, they buy it and they ride the second waves. Then again, profit taking, shakes off the weak hands, and then it moves higher, okay? Look at this scenario played out this year, okay, after they resumed their longer term trajectory line. See right here? Okay, went up, comes down, goes up again. Then here consolidates for quite some time, then breaks out, comes up, comes down again, consolidates a little bit, and then they make their major move to the upside, okay? In addition to that, there is resistance, points of inflection where the stock comes down, and a lot of traders look at that as an inflection point. If we break that swing point, chances are that it's going to continue moving higher. Let me draw this right here and show you what I'm referring to. And these are the levels, by the way. Here's a point of inflection. Breaks it, moves higher. Here's another major point of inflection. Breaks it, move higher. Here's another point of inflection. Breaks it, move higher. And right now, what's the major point of inflection? Their all-time high, right here. If we draw the trend line, you can see that this stock is essentially in an uptrend, okay? So where would I want to see the stock come down to for me to buy it? At least right here, at the lower channel of this uptrend. The other methodology that I can apply to give me a better entry point is Fibonacci retracements. Let me pull up here my toolbox or my toolkit and apply Fibonacci retracement, which is going to be the entire move to the upside, this entire wave. And the Fibonacci retracement that I'm looking at, I pay close attention to the 38.2 or the 50% retracement, this buy zone. Let me draw a zone or rectangle, this zone area right here. Okay, and let's delete or remove the Fibonacci retracement. Let's see, remove, nope. There we go, okay. So ideally, I would love for the stock to come over here, okay, so that I can buy it back and play the next major bounce with my price target of, let's change the screen again, of 2241. So let's document that here. Let's type price target. Let's just round to 2200, right? Let's keep it simple. 2200, okay. Edit. Right here, price target. All right, let's minimize this. Where would that bring the stock? Yeah, it would bring it right around here. Okay, it would bring it right around there. But what needs to happen in order for me to gain more confidence from a trading perspective? What will give me more confidence is if the stock break resistance right here. If we break that level, and actually there's a small little level right here. And if we break that level, right here, the stock is catching a bid temporarily. And some people might actually buy the stock over here in anticipation to that move to the upside. But what would give me a greater amount of confidence is if we break the all-time high. Then that would be a tactical point where I can buy the stock and move higher. Now, of course, nothing works 100% of the time. No methodology, no strategy is going to be perfect. So the thing that you can apply to mitigate any faults or any downside or any mistakes in your own analysis is make sure you have stops in place. For example, let's fix this right here. Okay, let's say for example that you're playing this bounce right here, right? If you enter the stock, let's say right here, where's it at right now? 1493. Let's say you buy the stock at 1493. You may want to set a stop at the low point of today's action. Why? Because there is a probability that the stock can come down to 1200 and you could buy it at a lower price. So you have to have some risk measures in place, right? A stop is like an insurance policy from continuation to the downside. One of the things you want to do is make sure that you're minimizing your downside and you're maximizing your upside, where you have a strong risk reward measure, where your gains and your winners are larger than your losers. And one of the ways to do that is by having stops. So this is more of an execution standpoint from a trader perspective, applying technical analysis to see what is the momentum of the stock. The momentum is to the upside. Now we apply fundamental analysis and came up with a price target of, let's see right here, let's move this into our view, a price target of 2200. Okay, so I'm a bull. I'm a bull in the stock. I think that if we break this resistance point, we can hit 2200, and I have the fundamentals to suggest that. I understand the size of the global vehicle market, which approximately $3.5 to $4 trillion, and about 2.5% of global vehicle sales account for electric vehicles, and Tesla has 23% of that market. This year, they're expected to deliver 500,000 vehicles. Beyond that, once they are delivering from the Shanghai factory, Germany, and in Texas, once those factories are open and they're producing more vehicles, they're going to be producing millions of vehicles a year. So we have the fundamentals to sustain higher prices to the upside. And again, the chart is telling me this thing is in an uptrend. So this is my thought process. Now, in the third step of our process is to understand, okay, what is our investment thesis? Well, right here. One of the main catalysts as part of our investment thesis is, will they be added into the S&P 500? And if they get added, guess what? A lot of fund managers have to buy the stock because they have to mimic or represent the S&P 500. That is going to create demand for the stock, making it go higher. And number two, strong EV market growth numbers on a US side and on a global side perspective. So that's how we apply our three-step process. Number one was, let's recap. Number one, understanding the situation by performing due diligence. We did that by examining more closely their second quarter performance. We saw that they were profitable, free cash flow was positive, and they're expected to increase their margins. Therefore, profitability is now sustainable. Number two, we apply sales multiple and PE multiple, a blended format of valuation, and we came up with a, well, we could round $2,200 price target. And number three, our investment thesis is focusing on them being added to the S&P 500 and also a strong global market on electric vehicle segment. All right. So with that being said, folks, I think I will end the session here. Replay this lecture. Focus on the process and the methodology. Go back, review the other stock analysis that we've performed, this exact same methodology, which will elevate your technical skills and your understanding of how you should think about it from an analyst perspective and also from a trader perspective on how you can buy a high growth stocks and increase your chances of being correct, but more importantly, mitigate your risk by placing stops. All right. So with that being said, folks, I'll end the session here. I hope you find value in this. And with that being said, stay healthy, stay safe, and I'll see you in the next one. Take care.